Hello, class 12, and welcome to your economics class once again. This is Yanigam sir, and the topic that we are going to study today is government budget. This is lesson 1, and in this video, the main objective is to study about the meaning of government budget and its various types. Now, let us go to the meaning of government budget. We all know that in every government, the main objective of the government is to undertake various economic, social, and other activities. There are many functions of the government. It always tries to pursue or follow various policies in order to achieve certain objectives of the economy, like economic development, reduction of inequalities of income and wealth, unemployment, poverty, and many more. Therefore, the government has to incur various expenditure in performing all of these activities. And in order to achieve these objectives or in order to reach these objectives, there are requirement for revenues. So these revenues are in the form of taxes and public borrowing for the government. Accordingly, the government has to draw a financial plan to undertake all of these various objectives and activities for the coming year. Such financial plan is what is known as the budget of the government. So the budget is an annual statement describing in detail the estimated receipts and proposed expenditure and disbursement of the government under various heads for the financial or the fiscal year. In India, the budget is normally presented in the Lok Sabha in the first day of February of every year. Now let us move to the types of government budget. There are altogether 8 types of government budget, and they are union budget, state budget, plan budget, performance budget, supplementary budget, zero based budgeting, revenue budget, and lastly the capital budget. Now let us understand these types of budget in detail. The first one is the union budget. As the name suggests, union budget is the budget prepared by the central government of the country as a whole. Till 2016 in India, this budget was presented into two halves, namely railway budget and the general budget. The railway budget were related only to the railway departments, while the general budget consists of the budget of the whole country. Now we have the state budget. State budget is the budget which is prepared by the state government of the country, such as the budget of Delhi government, budget of the government of West Bengal, budget of the government of Bihar, etc. So these are some of the examples of state budget. Now let me elucidate what performance budget is. From the year 1975-76, all the central ministries and the departments which are into the development activities have to prepare performance budget. And these budget are normally circulated to all the members of the parliament. This performance budget consists of the main projects, programs and activities of the government in continuation of the specific objective and the assessment of the previous year's budget and achievements. This budget also mentions the scope and the objectives of the schemes, what are their estimated cost, what are their targets and achievements, and what are their shortfalls. So all of these things are mentioned in the performance budget. This budget also tries to compare the actual achievements of the various projects with the estimated targets. I hope performance budget is clear to you. Now let us move to another type of budget, that is supplementary budget. In order to deal with all the emergencies such as war or natural calamities or political instability, the government sometimes find it necessary to prepare an extra budget, and that budget is what is known as supplementary budget. This supplementary budget has been prepared by the government in the parliament in order to deal with such eventualities such as war, such as unforeseen natural circumstances, political instability, etc. Now let me explain you what is zero based budget. Before we understand zero based budget, let me tell you about the traditional budget. In case of traditional budget, if there is an increase in expenditure in comparison to the previous year, then the government just has to justify or clear why there is an increase in expenditure, and nothing more in detail has to be explained, and the expenditure will be sanctioned by the parliament. But in case of zero based budget, here it is a process which requires each ministry or department to justify its entire budget request in detail. Under this method of budgeting, normally the functioning of every ministry or department is reviewed in detail, or it is reviewed comprehensively. In case of this budget, normally the past expenditure is considered to be as zero, and all the departments have to start from the scratch. Is it clear? Now let us understand the another type of budget, that is revenue budget. Revenue budget shows the revenue receipts and the revenue expenditure of the government. Now let us know what do you mean by revenue receipts and revenue expenditure. Revenue receipts or revenue income for the government are those income which do not create any liabilities or reduce assets. This revenue are in the form of income tax, excise duty, interest payments, profits and the dividend earned by the government by giving services to the people. So these are the revenue receipts. So these revenue receipts do not create any liabilities or do not reduce any property or assets of the government. Is it clear? Another is the revenue expenditure. So revenue expenditure are those expenses of the government which do not add assets or reduce liabilities in the form of loans. So it is that expenditure which does not increase the assets or the properties of the government, or which does not reduce the loans or borrowings of the government. So this expenditure includes all those expenses which are incurred by the government in running the day-to-day activities of the government in the form of salaries paid to the defense people, salaries paid to the police department, and other things. Now let us understand what do you mean by capital budget. Capital budget refers to those budget which comprises capital receipts and the capital expenditure of the government. So now what do you mean by capital receipts? So capital receipts are those income of the government which create liabilities or reduces the assets of the government. So all those income or the revenue of the government which increases the liabilities or which increases the loans of the government or which reduces the property of the government is what is known as capital receipts. So it may be in the form of the borrowing of the government from the public, RBI, and the sale of the government enterprises. So whenever the government sells government firms or government enterprise, then they will get the income. So that income is what is known as capital receipts. Now let us understand what do you mean by capital expenditure. Capital expenditure are those expenses of the government which increases assets or reduces the liabilities of the government. So it is all those expenses in the form of buying land by the government, buying machineries, buildings, etc. So sometimes the government also pays off its loans or credit of the public. So that also comes under the capital expenditure. So normally capital budget consists of capital receipts and the capital expenditure of the government. So we have come to the end of this video. So in this video we studied about the meaning of the government budget and the types of government budget. Thank you everyone. Stay safe and healthy.